Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 22nd, 2021. What I'm going to do in this video today is a follow-up or part two to yesterday's video, in which I went over my watch list of various commodities and commodity ETNs and ETFs. So these are very tradable. Just about anybody out there has, if you're watching the video, you have access to ETFs. Or ETNs like these. You may or may not trade futures. I constantly post charts on the futures on the site, and we'll look at a couple of those today. But again, the focus here, and due to the sheer number that I have, I'm sticking with the ETFs and ETNs in this video. So we're going to go through in the same order as yesterday, and that's starting out with the broad-based commodity index, or ETFs. Those give you, it's a one-size-fits-all. You can buy one ETF and then have exposure, in this case, to, as you can see here, a lot of different commodities such as gold, crude oil, natural gas, Brent, corn, soybeans, copper, aluminum, silver, and cattle. That's all in this one, DJP. All right, so as I mentioned yesterday, you need to pay attention and know your ETFs. I always say, I have what I call the know what you're trading rule. You need to understand what you're trading and what it's made up of, because all commodity ETFs are not the same. Some have a very heavy weighting in crude oil and some don't. Some have only agricultural commodities without any industrial or precious metals. So there's all types out there, and I'll try to point that out when I cover these. So this one here has a total weighting in oil of about 17%, and if you add in natural gas, that brings it up to about 25%. So in energy right there is about 25%. The natural gas and oil, although they're coming out of the ground together, they can actually do their own thing chart-wise, so keep that in mind. And I always say this: the reason I spend all the time doing these videos instead of just going over one commodity ETF is I like to selectively and strategically trade the most bullish commodities long and the most bearish ones short. And at many points in time, or just about any point in time, some of these will be going up while others are going down. So think of this when you go with these broad-based commodity ETFs to an extent like buying the S&P 500 fund. Now you can trade, you can put your money in a mutual fund or a SPY, and in just that one ETF, SPY, the S&P 500 tracking ETF, you're literally spreading your money among 500 companies in 11 different sectors, in many different subsectors, by purchasing that one. And what's going to happen is, in the S&P 500, at times tech's going up and utilities or healthcare is going down. And so what the S&P 500 does, it smooths out the volatility compared to going into a more concentrated ETF like QQQ, which is half technology, lacking certain sectors such as financials, or going directly into a sector ETF. You're going to have a lot more volatility there, and then of course a lot more volatility just trading individual stocks. So the same thing holds true here. If you're somewhat risk adverse and don't like volatility, or you don't have the time or inclination to actively trade in and out of these individual commodity ETFs or futures, as I often do, then these are your ETFs. And I'll go over these real quick, and then we'll get into the individual commodity ETFs here. So yesterday's video, again, we focused on the long-term charts, and if you're interested in these, I highly suggest you watch those, because there's things you just don't see on a daily chart that will often show up on the weekly chart, and so you definitely want to keep those in mind, especially for the longer term. Okay, with all that being said, here we go. This is DJP. There's a clean up trend line, very clean. I like this trend line. Lots of reactions along the way, as you can see, including this one. And so the point of this video is to help hone down on entries and exit points in these trades. In this one, for example, it's a simple MO. When you recognize a trend, in this case you have a nice price channel, the MO is to go long at the bottom. And if you're going to short, you can. Some people will short the top of a price channel, swing down to the bottom. That's usually what happens once you get to the top of the channel. In this case, you had 3 tags before we went back down to the bottom. But again, these things are in a bull trend, and the primary focus here is managing long positions. And whether you're a long-term investor, that holds true as well. You want to add to something like this. This is the best opportunity to add on pullbacks to the trend line. And I share these levels because they work the other way as well. If you want to put a stop loss order, let's say you've milked a good part of this run, then an objective stop would be below the trend line right there. And you want to give it a little bit of room, not 2 pennies below, but maybe a solid daily close, and sometimes even 2 candlesticks below there. Up to you completely. And then the other level, look for these reaction lows right around here. The actual lows there, you have quite a few candles right around there. So that's support. I'm going to put the line at the low about 23.33. So these are both objective levels that you might manage a long position to stop out on or buy pullbacks to. Completely up to you. Again, I remain longer term bullish. I'm going to show you a few charts in a second here on things like wheat and corn, which are running because I suspect there's quite a few out there that have maybe taken some of these trades that I've highlighted in recent months, but maybe book profits on some of these nice gains. And I just want to lay out the potential and show you that as much as the commodities are off the bottom so far, there may be a lot more upside to come. So I'm going to get to those charts in just a second. So there's your levels on DJP. I don't want to spend too much time on that one. It's actually not my favorite. And here's one GSG. You have the breakdown there is about over half energy, so keep that in mind. You don't buy this one unless you are bullish on crude oil and natural gas. So you have about 54% in energy, only about it's a decent weighting, but about 20, a little over 20%, 20.44 in agriculture. Industrial metals 12.3, livestock, which should be in agriculture, I would figure, but who knows why they break it down that way. I got it off the website for the iShares. 7.4, and then precious metals at 5.46. So here's one. There's an example where if you're bullish on gold and silver long term, you might then supplement this ETF if this is your one of your picks. You might supplement that with something like GDX, the gold miners ETF, or GLD, or SLV, SLV, the silver miners, or silver ETF, or SIL, the silver miners ETF. There's all those other things there because you don't have a very high weighting. However, if you have a good chunk of GSG in your portfolio, you might not want to load up too much on USO, the crude oil ETN, because again, you're going to have a lot of overlap there. All right, so there's what we need to do is this one ran into downtrend line resistance. Nice reactions here. 1, 2, 3, a little pullback, and now we're there again. So the story on this one, bullish if it can break above that level. Break out above that, a solid break should bring us up here to that next target at 1663, where if you get a rejection, a pullback, there's some decent support around 1330. I have minor support. I don't know if you can see the line there. It's at 1385. That's minor support around 1385-ish. So those are your levels, objective long entries. A pullback to 1330 or a solid break above the trend line. And I give you targets. And the way it works, if you buy a pullback to 1330, if that's what we get, you put a stop somewhat below. If you get a breakout there, assuming you don't have a position to begin with, then you might want to stop. In this case, let me give you a level right here. There's some decent support right about there, 1418. That would be a tight stop that I think would be reasonable there if you took a breakout above the downtrend line. GCC, this one spread out pretty nice. This is probably my pick of the litter for the broad-based commodity index ETFs. 23.6% in the soft commodities, 23.55 in grains, 17.58 in precious metals, 15.3% in energy, almost 12% in livestock, a little less than 6% in industrial metals, and then about 2.4% in natural gas. And again, there's I gave this yesterday, the detailed breakdown right here, and you can also get that off Wisdom Tree's website as well. So that's it. Long term, again, I'm not going to spend a lot of time here on these weekly charts because they were covered yesterday, but the story on this one, we took out that long-term downtrend line, and if we can pop much above this resistance level 2075, that's going to be bullish. There'll be corrections along the way, and if you break this uptrend line, this weekly uptrend line, it could be a decent correction. Again, I give you targets in yesterday's video on this weekly chart. For example, pull back to that 20-ish level would offer an objective long entry, or should, depending on how the charts look at the time. And when we look at the daily chart here, 1885 is pretty solid support as well. So let's let's just say we get a correction. These guys have been running strong without much of a correction at all. Most of the corrections so far have been in time, more so in price, and that's very bullish. Again, I've made the case repeatedly. I think a pretty strong case can be made this is early bull market action. That's usually what you get. So you may not get a pullback to 1885, but if you do, it would certainly keep the bull trend intact, and it's a pretty big support level. So there's a level. Otherwise, if you feel like you've missed the boat and you want in on these, you could layer in. Is it the most objective time to buy now? No. A lot of these are forming potential negative divergence. I say potential because it's not confirmed. To confirm it, you need to roll back down on the PPO here, get a bearish cross with a new high in price, and so that could happen soon. And if it does, and then a trend line break occurs, that's a good chance you might go down. Let me give you the first support, by the way. Minor pullback here. If we get another consolidation like this, pullback to 1982. So those are your support levels. And again, use them for long entries, use them for stops, use them as you see fit. Trend line 1982-ish and then 1865-ish. And again, you may or may not get that. I'm going to show you in a second how some of these commodities can run when they want to run. DBA, this is your agriculture ETF. So if you want a pure play on just the ag commodities, no industrial metals, precious metals, crude oil, anything like that, this is your one, DBA. Been highlighted many times, and I talked about it back here in this basing pattern. After the bullish falling wedge breakout, we had a breakout and we went sideways, and then I mentioned a break above this spacing pattern would be bullish, longer term bullish, and it certainly has been. It's just been a nice run up in the ag sector. This was the biggest correction we had so far, and then boom, strong rip. So that's it. And by the way, it broke out today. I had a target here at 1781 resistance, and pretty impulsive breakout today. A lot of that's due to wheat and corn. Those grains are just running. It's been a great trade. So this one, cattle 14%, soybeans about 13 and a quarter, sugar almost 13%, corn about 13%, cocoa 11, wheat 11%, coffee 9, hogs about 9%, feeder cattle about 4.5%, and then cotton almost 3%. So very, very well diversified among the various ag commodities. And again, one size fits all if that's what you want to target. All right, next up, Moo. Moo was covered recently as well. This one's going to be more correlated to the stock market. This does not hold any commodities. It holds companies that are in the agricultural arena, agribusiness, like John Deere and Archer Daniels Midland, Tyson Foods, things like that. Potential divergence, and again, divergence doesn't always stop a security, especially in an uptrend. You had a divergent high here, and you had a correction, but it was mostly in time, sideways correction, and then the next leg up. But again, I'd be remiss not to point out the divergences because quite often, even in a bull run, you get negative divergences. A correction will follow, but often as well in a bull market, especially a strong bull market, divergences can be burned through, meaning taken out. You take out those previous reaction highs and you can keep going. But either way, there's a trend line to watch right there, and a solid break below that trend line could trigger correction. And then you'd want to target, there's quite a few reaction lows. Those are all potential pullback targets. There's a reaction low, there's one. And then the first really decent or solid support I have here is about 78.09 or 78, let's just call that 78. Again, if we get a correction and that time comes and we get near there, I will certainly share my thoughts as based on how the charts look at the time to see if that's a good point to buy. We may never see 78 again, not for many years. Who knows? All right, next up, JJS. And this one is soft commodities, very thinly traded. That's why you have these odd looking candles like little specks, because it's not a very low volume in this one. But it's, if you want to trade the softs, which are coffee, cotton, and sugar, this is your ETF or ETN, I should say. And there's your uptrend line. This one, and again, thinly traded securities, not unusual. You had a little whipsaw down through there. But other than that, it's pretty much respected this trend line very well. So again, that's your MO, is to buy pullbacks to the trend line, and then maybe consider a stop out or stop buying at least if it breaks the trend line support, unless we go down to a level where we've had a decent correction. Wheat, okay, again, these grains are just doing great, and I'm going to use this one as an example. So for a long time, we were swinging wheat. We had a lot of trades on wheat up to this level right here. That's always the maximum targets that I had back here. We've been buying wheat for years, highlighting it as long trade, objective long entry on pullbacks to this level here, about 490 or so, and swinging up here to the top of that range, and we've had several hits of that. However, more recently we broke out, and that's a breakout right there. And we came in and back tested, and there's a case where back test came a little inside there, but then boom, call it a bear trap, or bear trap, or maybe shorts figured they could short wheat and they got squeezed out. Look at that explosive move so far on the breakout. And by the way, since the update yesterday, we took out that 650 level. That's resistance right there. You see these two previous reaction highs? Boom. This is bull market stuff right here. Unless that fails and fails hard, that's a pretty powerful breakout. Now let's take a look at wheat on the longer term charts. I'm going to get to, this is corn. Let me start with wheat, and then we'll look at corn when we get to that ETF. So I have wheat somewhere in here. Let's go to my weekly chart. And so what you're looking at is a long-term, 2-decade chart, weekly candles of wheat futures. Keep in mind, these charts we're looking at here come from stockcharts.com. They are updated at end of day. That's what the EOD right there means. So it's not reflecting today's huge 5, almost 6% move in the futures. That's why I put the line right here. Right now, wheat futures are trading at 711. And so that's right about where I put this measuring tool. And what I'm doing, and I know you can't see this in the video, or I doubt it unless you have a really big monitor, but I'm going to show you what I'm getting at. I have the percentage gain right now measured to about where we are today. Again, this candle will populate tonight, and it'll look something like this, take us up to about that 712, well, where we are at right now, at least 712. And from the last time I highlighted, not the last time, I've had many entries on wheat, but back here, and that would have been in 2019, I posted it on the site as for long-term traders, a great entry point. This is a long-term bull market trend line. Again, we're going back into the 2000s here, almost into the late 90s. This is 2000 in the beginning of this chart. And it is just a great bull market. Wheat is in a secular bull market. Now, within a secular bull market, you have cyclical bull and bear markets. There's a cyclical bull right there, and that rally off the pullback to the trend line, it's measured here, was 380%. That was followed by a cyclical bear market. I don't have the drop measured right now, but I can tell you it was big. And now, where am I going with all this? Well, first and foremost, that's it. It shows, long-term charts are good for a long-term investor and trader. If you bought wheat there, you're still in it. You're already up about 70%. Not bad. And again, I feel comfortable with these trades as long-term investments because you don't have, wheat's not going to go to zero. If you're in a bear market, and ultimately if this long-term trend line breaks, that's not going to be good. But right now, you have to look at it as those were the levels to buy. And here's the gain. When you have one of these runs, this one, for example, well, I'll measure them out. This seemingly small run was about a 52% gain from that point to that point. From here on that pullback to the trend line, 380% to this high right here. Okay. Then you had a little, I guess I measured at these oversold readings. That's what all these other numbers are right here. 45% rally, 110% rally, 35, 45, and we were oversold back here as well. So far, 68. So you might say, wow, that's a nice run. But again, if this is early stage bull market action commodities, I did say, yes, wheat is in a secular bull market, but a lot of the other commodities, and even wheat has been, if you look at it from back here, for about the past decade or more, about 13 years, they've been in a downtrend, at least off those highs. And so, if I'm correct, and this is early stage bull market action, we could easily do, another 380% run. I just wanted to point out that, we're not even oversold or overbought yet on the weekly chart right here. And so as much as, again, wheat is up today and, over the past few months, there could be plenty more upside to go. Okay, back to the charts. Next one up is corn. Another grain. They tend to run together. They're, I don't know, I'm not an expert in commodities, but to use the word maybe competing food sources, because the corn prices get up too high, you can start making things with wheat, cereals and stuff like that. But either way, they tend to run together for that reason. They're also grown in, well, even for the most part, similar climates, temperate climates. And that one's a pretty good resistance here at $20 right now. So corn's ripping today as well. This is the ETN, CORN, up to that $20 resistance. Why is that resistance? Because I have these reactions back here. In fact, that was an old price target from, looks all the way back here. We had a little wedge with a divergent low, and looks like a price target from back then. And so that's it. We're at resistance now with some potential divergence, but again, I have to say potential. It's not confirmed because the momentum is up, and if it continues up, we can burn through it. However, should we reverse off that resistance level, we could get a pullback, and we would put in a divergent high if it's sharp enough, and you could get a decent correction. So, okay, where do we look for to buy? Maybe if there is a correction, you want to get on this commodities train. Right here, there's a beautiful trend line right there. Just come off the lows, make sure you're using log scaling. That's what I always use on my, or almost always on my charts. Right here is, we had a divergent low back there, and a couple tests of that level, and then finally, boom. So there's your uptrend line right there, off that low in August of last year. And that would be a potential pullback target. Okay, and now we're just going to jump over to the corn weekly chart, and again, this is a long-term chart over 2 decades of price history here, and what we're going to look at is a couple things. All right, so the current run right now, I have corn futures trading at $650.50. Again, this is an end-of-day chart, so let me move this line up. Hold on, let me annotate this chart because we're higher than we were earlier today. Okay, there we go. I had to move the line up here. What I'm doing is a measuring tool. Comes off the lows right here, and that was a big divergent low. I have my indicators flipped around. I have the RSI up top, but you can see here you had some pretty big divergence, very big divergence forming right there and there. That's positive divergence forming in prices, again, on the weekly chart, multi-year divergence. And this is just another great example of a basing pattern. Corn prices were consolidating or basing in a big range, and they recently broke out, and that's powerful stuff from a charting perspective. And so far, let's say you're chomping at the bit to book profits because you caught this one. And again, it's this end-of-day chart. It's going to be updated. As of now, that's what the candle would look like if it was a live chart. We're at 650. That's 110% move just since earlier this year. So you've more than doubled your money in corn, if you've been in it and caught this rally. Now, okay, so you might say, well, take profits. Look, there is nothing wrong with taking a profit. Nobody's ever gone broke taking a profit. But just to put it in perspective, when these commodities want to run, they can really run right here from this point to this point. Nope, right here. Before it all was said and done, this rally really came in about 3 waves. A, B, C, your primary waves there. That was 316%. This one here, from, let's see where I have it measured. Oh, from that same low before that bull market was done, because remember, that was just the first A, B, C up. Then we had a big correction, put in a divergent low, and another leg up to the high right there. So before all that was said and done, it was 345%. And to give you just to, again, put in perspective some of these other rallies from right here to right there, that was 180%. And so again, we've done 110%, which is a third of what this run, or almost a third of what this run was right here from here to here. So and now keep in mind, nothing goes up forever. You don't see a 316% run without that big drop in between. And then if you tried to milk the whole thing, that 345% run, you would have had to ride that out. So that's where I kind of morph, long-term investing with active swing trading. Or again, you can use the chart trend trading You don't have to be an active trader to sidestep some of these big givebacks. And again, that's why we highlight things. Back there, you had a divergent high, negative divergence. Here, you had actually divergence both times. There's divergence up top on the at least RSI divergence. You had negative divergence here at that high. Right now, you have some small, but very small divergence here on the RSI. You don't have any on the PPO yet. So again, there may be more upside in this rally, hard to say, but as of now, there's certainly momentum there. Okay, moving on to the rest. Soybeans, there's your trend line right there. Nice clean trend line. It comes off the August 2020 lows right there is the trend line I'm using. Reaction 1, 2, 3, 4. There's a trend line to watch. Like a lot of these commodities, there is potential divergence. So we may get a correction soon. It could come at any time, but right now they're buying, and I don't see there's zero sell signals at this point in time. That's again soybeans. That's another one that can run when it wants to. JJG I highlighted back here. If you wanted to go with those the grains, it has corn, soybeans, and wheat. And again, it's just been a nice run off the bottom, about 76% since last August. So a little less than a year ago. And again, still running, divergence building, but we had potential divergence, and you know, may get taken out. But if I get any sell signals on these, I'll let you know. JJG, I don't have any levels. It started trading back here, so we don't have any resistance levels overhead. Cow, and this is an example I talk about. You know, when you see the grains running up hard, that usually puts pressure on livestock. Because Farmer Brown needs to feed his cows and pigs, and it's, you know, it's not cheap. When grain prices double, and you know, in just a matter of months, that's a big input cost to you know, feed the livestock. So that usually is going to put some pressure there. And you know, ultimately that would be, you know, longer term bullish. You're going to see, you know, livestock, you know, beef and you know, hog prices eventually go up, because, and that's the whole story of this, you know, these commodities. It's an inflation based thing. They tend to move overall together, the agricultural commodities. And so pullbacks, we do, you know, near term, there's a breakdown right there. We broke, fell back below that 38 support. I want to give you one more line, which would be a potential entry point in this one. That's right there, about 36.22 is support, and even better support if we get down to about 34.90. This one, see, this is the case where you had divergence and it started to play out. So that's why I highlight those divergent highs. And then it would follow it up with a recent sell signal. So near term, they're looking near term bearish right now. You know, doesn't mean they can't go up, because the trend is bullish as well in cow, again, the livestock ETN. Coffee, JO. Coffee has just been basing, and I suspect, like everything else, it will break out sooner or later. So from looking at the coffee ETN here, JO, you want to see a breakout above this 41-ish level right there. We had one there, and it was very brief. It didn't stick, but we've had quite a few reactions since then. Most importantly, these last 3 reaction highs around that level. And this is another one we've swung up. You know, we buy down here at this level here. Even that divergent low, I called that to be a, you know, false, you know, breakdown whipsaw signal. And we went long coffee on this breakout right here. We had a divergent low. We recovered the 30-60 support. That's this level here. And then we had a little wedge breakout, and that's where it was actually posted. So we went up, boom, 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 hit all those targets right there. So that's the big number right here, 40, 70-ish, call it 41. Again, those 3 reaction highs. And that would be a longer term breakout, and quite bullish for coffee. Cane is one of the 2 sugar ETNs that I follow, and there's an uptrend line right there. There's same story, potential divergence coming up on resistance at 812, and you know, pull back to the trend line and or that $7 level. If you break the trend line, there's some support around 7. Anything much more than that could cause a deeper correction, take us all the way back to 658. But as of now, the trend is up. And you could probably even do a minor trend line here. And what you want to do too, if you're really serious about these, look at the futures. Put these comparable trend lines, zero in on the like 60-minute charts of the futures. You're going to have a lot more reactions. A futures trade. Some of the all these are different. Some of these trade after hours, overnight, and things like that. Some have quirky trading hours. But SB are your sugar futures, and we just recently had a trade on that, as a matter of fact, SB. And I also mentioned these as the proxies. So that's cane, and then the other one is sugar, SGG. And again, you can see that little minor trend line there. So if you're long sugar, you could stay up, as long as that minor trend line, as long as it remains above this minor uptrend line right here. Again, no divergence at this point in time, but if you make a new high, a marginal new high, and then reversed, we may have divergence there. So it would look something like this. Let me move that line. Something to watch for. And again, bull market, you might burn through the divergence. So NIB is cocoa ETN, and this one was highlighted back here last year as an objective long entry right there. I really liked it because you had not only a pullback to this nice clean trend line. Look at all these reactions on that trend line right here, this primary uptrend line. You also had bullish divergence, nice clean positive divergence, and from there, boom, we went straight up. Then we hit it. That was in and out. You can't, you snooze, you lose on some of these. It exploded off that that pullback to the trend line, and so far it was good for about a 37% rally, and we're still in an uptrend. And that's the story on this one. Like I showed you a long-term chart of wheat, you're going to have these tradable trends within the larger uptrend. We have this is our uptrend line, pullbacks to that trend line as long as they continue to work, our objective with a stop below. Sometimes it might be a while before we hit it again. We may go on to break out, and if we do, that's the level I'm looking at right there. 34.90 is where it's listed. So call it 35 if you want to be safe. Break above that should be a major breakout for cocoa, and really take this one up. BAL is cotton. There's cotton. Let's see what I have on the chart. There's an uptrend line to watch. Again, pullbacks to the trend line. Not one of my favorites, but hey, it's the same story. Inflation trade, commodities going up, up, up. Wood and cut, as I mentioned, are timber and forestry ETF that holds individual companies that are in the paper and timber industry. And there's your uptrend line right there. Lumber prices they've gone parabolic, and we're going to probably have a crash on those prices soon. The nature of lumber futures, if you get these parabolic runs and then you get these very powerful corrections, so that'll probably take these timber companies down. So I'm looking, this is to me more of a short setup, waiting for those sell signals. In fact, I did have a sell signal recently on lumber, and I'm waiting for the next sell signal. Here, I'll do that. Why don't I just give you that chart? This is the 60-minute chart of lumber futures. This is a longer term trend line that I'm watching, and here's an intermediate term trend line and a very short term trend line. So we had a sell signal here recently, took out the minor trend line, hit the secondary trend line. A little bounce to be expected, and next sell signal will come on a break of that next trend line right here when we break this, and that should take us down to that other trend line there. Here, let me show you. Let's see if I can give you a yearly chart on lumber futures. There's what it looks like. So that's the longer term trend line I'm going to swing back down to right here. That's a minimum preferred swing target, and you can see here, I think you can see, let me zoom in a little bit, sometimes I forget on the videos, you might not be able to make that out. That's that trend line that just broke. So there's a breakdown, and that's where I think we're coming down to. And then if and when that trend line goes, that would be a more powerful sell signal that could take us all the way back to 700 or so in lumber futures. From where we're at today, if we get down that far, that's going to be about almost a 46% drop. Again, from where we're at today. All right, next up would be, well, this one's retired now. It looks like it's no longer trading, coal. And that was, had a whole bunch of coal stocks and trade ideas back here recently. And we'll do those in another update, and no longer in those anymore. GLD, same thing. I've updated gold so much. There's a downtrend line. We're just cracking above it. Some resistance about 168.70. Not going to spend too much time because I've covered this so much lately. Here's your long-term uptrend line and a buy zone, the bottom of the buy zone. So you had two, what I believe to be, very objective long entries here, and so far moving up. And you guys know my longer term thoughts if you've caught up on my analysis in recent weeks or months. PALL, Palladium, here's a little uptrend line to watch. Potential divergence forming here as well, and you're at this previous reaction high. So you're at resistance. So if anything, I would not be going long Palladium here. You could be looking to short it on a pullback on this break of this trend line. If it breaks above that level and holds a breakout above 270, 250, that's going to be bullish, especially if it can take out these divergences. But as of now, we're at resistance, that previous reaction high, with potential divergences in place, and that could trigger correction or pullback. And I would say pullback if you want to target it. I'll give you two targets if you're interested. Right here, about, if I can get that line where I want it, about 250, 285, and then 236, and I think it would probably, that's where we'd probably go down to 236 right there. PPLT is platinum, and here's your uptrend line right there, potential uptrend line. We only have two reactions on it so far. And the main thing I'd watch if you're trading it, I'm not crazy about it, either long or short, but there's this triangle pattern, and upside break is going to be bullish, downside break will be bearish, but then you have potential, you have actually price support as well. So the downside, I think, is limited before at least the buyers step in, unless something really big happens. But that support runs from about 105 to 107 or so, that support zone, plus that potential trend line. It's only potential now, but because we have price support below, that's what I think you'll get a reaction if we pull down there. So that might be, either a pullback short target or a long entry for a bounce trade with stops somewhat below. Okay, almost done here. Next one is copper. Copper has been in a strong uptrend. There's your uptrend line right there to watch. Whether you want to set stops below it or buy pullbacks to it. Potential divergence forming, so that's something to watch right there. All right, next up would be JJC. That's also another copper ETN, different company, same thing, so same chart. LD is lead, very thinly traded. There's your uptrend line to watch and buy pullbacks to. We put in a divergent high there, and there's a correction where the divergences played out and led to a pretty decent correction, but then took us back to the trend line. So that's it. There's your trend line, and there's a level to watch, trade off of, or use for stop loss orders if you're long. JJU, this is aluminum. You can see over time some of these, you had the thin candles back here, very thinly traded, and you're starting to get more and more volume. That's why these candles are looking a little more normal recently. There's your trend line. Very simple stuff. Let's not oversimplify or overcomplicate it. Potential divergences in place. So right now I wouldn't go long or short, but if you get back to the trend line and things look good, maybe a long entry there with a stop below to continue the uptrend. Okay, and that's it. It's a long list, a lot of commodities. I wanted to cover them all. And again, they're, like anything else, it's just a way to diversify a portfolio, asset allocation, and if nothing else, a sector that's in an uptrend right now. This has been Randy Finney with Right Side of the Chart. Have a great day.